Hello, everyone. Welcome to our February 18th, 2021 webinar, which is we're going to talk about COVID-19 and all the government programs. We'll roughly touch on what they entail, but mainly like how they will impact your 2020 taxes. We're coming into T-slip season and personal taxes. And I'll hand it over to Curtis, who is my co-host, and he can do the introductions.
Yes. So we're True North Accounting. Most of you know myself, Curtis, and Matthew Peterson, and we're gonna walk you through this. We're both CPAs, the partners at True North Accounting. Before we kick things off, I just want to mention at the bottom that if you want to ask a question, there is the Ask a Question feature at the bottom, so you can type it in. Those are the ones we're gonna, as they get voted up, we'll address the ones that are voted the highest in terms of importance. And then there's also the polls. So it's great to see the feedback on the polls because it gives us not only stuff to talk about and address with you guys, but also insight into kind of future webinars. So here we're seeing a great picture of Matt and I in front of the Bridgeland office, and we're starting off right in the heat of tax season now. So we're a little busy, a little slow, and probably we just hope we don't have a poor performance like the Flames did last night, and I'm sure Matt would agree with that. Yeah, we can move to the next slide. We'll go over the agenda.
You're hilarious. Okay, so it's an hour-long webinar. For about the first half, we'll go through a slide deck that just covers CERB first, then the CRB, then CEWS, then CEBA, and then lots of time at the end for questions, which again, as Curtis mentioned, use the Ask a Question function at the bottom of the webinar screen there. And also vote on other questions. So review the questions, see if there's one or if somebody's already asked the question that you wanted to ask, and then we will answer those starting at the one with the most votes and working our way down so that we don't get too caught up in specific questions about one person's situation when there's 40 other people. So yeah, that's why we like that function. So you can also comment and stuff on the chat function on the side. Lisa's going to monitor that. Lisa helps us out with all this stuff and make sure we are doing things properly. But yeah, the questions at the end, use the Ask a Question, answer some of the poll questions as well. And yeah, we will get started here. We'll be wrapped up by 5 for sure, if not sooner. So the whole point of this one is to help you understand the tax implications of some of those COVID-19 relief programs that have come out in the last year, because it's tax time now and it's T4 slip time, and yeah, it's time to pay the piper.
Yeah, so we're going to first talk about CERB, whichever you want to call it. We're going to use those acronyms, so like Canadian Emergency Response Benefit. I'm sure everybody's used to hearing CERB, CRB, CEBA, CEWS. So just, yeah, we're going to be throwing those acronyms around quite a bit. But CERB, it was the first one that came out. It was the immediate one that the government kind of rushed out as soon as they knew that the pandemic was going to be a thing. And you had to go online and sort of click through the declaration saying that you qualify. And hopefully you read all the eligibility to say that you did qualify, you had a certain amount of income, so on and so forth, and then $2,000 a month was what it was. It was $500 a week up to 26 weeks, so max of $13,000 could have been received on this before it ended. It is taxable income. I'm sure everyone's probably seen news articles since then kind of talking about like, hey, you're going to get a T-slip, you're going to pay tax on this, so do expect to owe, because no tax was taken off. Like a T4, nobody took tax. They gave you $2,000 and you're going to pay tax on that just like normal income. It was 4 week increments from, or 4-week increments that fell within March 15th when it started to when it ended September 26th. And that's when the CRB, the new one that's now at play, came out. CERB, it was available to employees, contract workers, self-employed people, essentially anyone that had a certain level of income. And I think we're getting to that on the next slide. But one of the other like a couple of the other things to touch on. So you had to have stopped working or had a loss of income due to COVID. So it couldn't be you just quit, stepped away. It had to be COVID related that created it. And I guess I'll say this now, and because it does apply to a few of the other programs, they have changed. They rolled them out. There was problems with them. They weren't perfect. They have changed multiple times. So they're when they first got announced to what they are now is a little bit different. So one of the changes, you can't make more than, initially they said no income, but now it's you cannot have made over $1,000 during that 4-week period, and you're still eligible. You'll get a T4A, so it'll be a T4A from Government of Canada. And some of them, I've seen them coming out already. So some people are starting to get them, but by March 10th, they're going to be available on your CRA online account. You might get them in the mail in one of those lovely brown envelopes. And CERB that was repaid prior to, we skipped ahead. All right. Won't be on the, if you took CERB when you shouldn't have, and you repaid it, it's not going to show. It shouldn't show on the T4A, so it won't be included in your taxable income if you've repaid something you weren't eligible for.
And the repayment part is pretty relevant. Like this was like May, I heard this stat, but it was like right after they launched this program, and right away they had 11 million CERB applications and 8 million unique applications. So there was 3 million duplicates. So like I know, like one of my friends just got paid twice. He doesn't remember applying twice, but he got paid twice. And so right away, like that's how you would automatically be in a situation where you have to repay a certain amount. So if you didn't repay that, like if you got 2, but you didn't repay it by December 31, you'll just have to owe it with your taxes this year. Back to you.
Yeah, so validation, watch for the brown envelope. So this is how CRA, the dreaded brown envelope, that's how they're going to contact you about the CERB validation or the repayment. Their letters are still as ugly as you're used to. So pay attention if you do get one of those, read through it. Their letters are not nice to read, but they do have a bold area in the center saying, hey, we have reason to believe, maybe it's based on your last year's tax filing or something else that they have noted in their system. They say you're not eligible and you have to repay X. So after that's what we've seen so far. And after the fact, we know there's going to be more where they're going to be following up with people. We're not sure exactly. I don't know if the CRA is sure how they're going to do it yet, but they're probably going to check in on people, whether it's randomly or whether they hone in on certain people based on financial information filed in tax returns. So you want to be prepared. You want to have pay stubs ready. You want to have any statement of like benefit contact. They could ask for a statement of benefits. They could contact information of your employer. Record of employment, obviously showing that you were laid off because of COVID. Like that's going to be a definite, like a good supporting document. Letter from an employer explaining the reason for leave. So if you were off work, you took CERB, you want to be able to show that, no, I didn't just take a leave of absence. It was COVID related. Contractors and self-employed people, if that's the boat you're in, invoices for services rendered, like showing them that, hey, there was a pause, there was a decrease in the revenue here, and I lost income because of COVID's another great thing. But another thing to note, CRA may contact the other parties involved, so they might reach out to employers or clients. If especially if they do not hear back from you. So usually you're going to get a letter and you've got to call the number on the letter or call into their 1-800 number and simply talk it through with them, explain to them why if you've taken CERB or CERB, whichever you want to refer to it as, you probably have a reason. You've clicked through, you needed it, and it was likely because of COVID. So you've probably got some form of record of showing your bank statements and income loss and a bunch of there could be a number of things that you can support it with.
And there was just like a mad scramble right when this came out to lay people off and get those record of employments out, which have like codes for like reason for dismissal, if it's termination or retirement or whatnot. But there wasn't something for COVID on those at the time. So I think they will be asking questions, but they'll probably start at the employers and go from there. We'll see. Everybody's just flying by the seat of their pants at this time. But yeah, when that CERB is taxable, like if you got the full 13 grand, it's just taxable at your personal marginal tax bracket. And these are the tax brackets for Alberta. Yeah, so if you made 50 grand in other employment income, your CERB would be taxed at that 30.5%. So that's just what that means. We can come back to this slide as we talk about the different programs. Anything else on CERB before we move to CRB?
No, have at it, Mr. Peterson.
Okay. So the Canada Response Benefit, this is, like Curtis said, the new one that just started September 27th. It's kind of replacing CERB, and it's targeted at people that are either out of work or self-employed people is like really who it's targeting. People that are not eligible for the EI or WCB or other short-term disability benefits. So you either have to be out of work due to COVID or experienced a 50% drop in revenue due to COVID. So again, there's like, you can't just have quit your job during that time and try to claim it. It has to be for reasons COVID related. And you apply every 2 weeks. They've really synced this up to look a lot like EI, where you have to apply every 2 weeks. You have to show that you're looking for work. So it's very similar. The payment's a little bit, actually, even the amount is pretty similar to EI. You just have to have earned $5,000 in 2019 to qualify for this. And okay, so when you got that $1,000 for a 2 week period, they would have withheld 10%, so you would have only got $900 for that 2 week period. So at least you have some tax paid. So when you're calculating that 50% decline in income, you just have to, like, you need a base period to compare this to. And so if 2019 is the base period for 2020 income, like you want to show your income dropped in 2020, like October 2020 compared to your average income earned in 2019. So say you earned 60 grand per your 2019 tax return in 2019, you just divide that by the 52 weeks for an average weekly income of 1153. So to be eligible, if that's where you're at, to be eligible for CRB, if you're still working, your income just needs to be less than 576, which is half of that 1153.
If your income dropped entirely, obviously this is a lot easier of an example. Like, this is just an example to kind of show, okay, how can I even remotely come close to figuring out my weekly drop in income? Because it's never that simple in the real world, right? So if looking at your total income, and work out a way to find out your average weekly, and it's like, hey, I've got my hours cut by half. Now my pay's half, as like some way to show that, yeah, it did drop half and I should qualify.
Yeah, and it seems like they're overcomplicating some of these programs with these calculations, but like whenever they're giving away free money for people that are out of work, they don't want to demotivate people from working if they can. So if they're like, if say you're a contractor and your 3 biggest clients are all shut down, but you still have like clients 4 and 5 that are smaller, like they don't want you to not work because you're not going to get the $1,000 every 2 weeks. So yeah, they're just trying to like let you work a bit, but not too much, or like they don't want to give away money to people that haven't been impacted, but they don't want to prevent people from taking on work when it is available. They want to keep the money flowing.
And with CERB, with CRB, with CEBA and CEWS, like it's very apparent that they rushed all of them out to begin with. So none of these were even remotely perfect to begin with. Some people that were paying themselves dividends right off the bat were just completely forgotten about until they heard everybody like not complaining, but like voicing their opinions. Like, it's not fair. This doesn't capture everybody. And so inevitably they tweak the programs and they change them, and the complications roll in just because they have to try to perfect these programs so they can get money into the hands of people that need it most, I guess. But they were far from perfect. And I know a lot of people that have talked to me lately have heard me say something similar. So
yeah, and I don't know if too many countries in the world got it perfect right off the bat either. Like the States, imagine inflating all these programs by 10 times. And yeah, there's people complaining about those programs too. So nobody got it perfect, but yeah, we're in the situation we're in. So we'll work back, figure out the tax implications for 2020. And so one of them is they withheld 10% for taxes on the CRB payments, which it's good. It's good that they did that for this program, but going back to the tax brackets, it's not a lot. Like,
yeah,
if you made over 50 grand, you're in that 25% tax bracket, but it's something. So just similar to CERB, expect to have to pay some tax if you collected CRB. And if you earn too much, so if you earn more than 38 grand in either 2020, so say you earn more than 38 grand in 2020, but you collected CRB for all the months it was eligible, call it 3 months in 2020, you get clawed back at, okay, what's that? So that's 12 weeks. So say you got 6 grand in 2020 from CRB, but you earned more than 38, they'll claw back. As soon as you earn 50 grand in 2020, they would have clawed all that back. So you just have to repay it all back, basically, when you file your taxes. Yeah, so, and then for 2021, again, if you kept claiming it for January, February, and got another 6 grand or even 7 grand, and then you end up earning more than 38 for the rest of 2021, then again, they'll claw it back. Yeah, again, this is a year-long program, so it's still running, but you have to apply every 2 weeks, just like EI. And so that requirement where you have to have earned 5 grand in 2019 or in the 12 months prior to when your income got cut in half or stopped. There's kind of been a lot of debate over this like definition of $5,000 net income. So it can be employment income. So you had a T4 on your 2019 taxes, or for 2020, self-employment income. So you're claiming on your personal taxes, a 2125 like business activity statement, or dividends, but they have to be small business dividends. So not like, you can't claim your TransCanada dividends. Yeah, no dividends from GameStop. Okay. Yeah, so you have to have earned that income basically for the dividends to be considered income. But it really comes down, like when it comes down to tips, like for hairdressers or servers, you have to have declared that amount of tips in 2019 for that to count. But EI and mat leave does count because it's it's supplementing your employment income. So that does count, but no pension, student loans, bursaries, other investment income.
And just to conclude, like CRA is going to look at the prior year tax return, and they're going to see what boxes are filled out, and they're going to look and say, did these types of income, did they reach 5,000? If no, you're probably getting a letter and they're going to ask more about it. If it was well over 5,000, your T4 was 20,000 in the prior year, no letter should be expected because they can easily verify that, yeah, this person was over 5,000 because they had a $20,000 T4 the year prior. But they usually base all of their original sort of analysis, they're going to go right to the tax return. So if you're unsure, look at your prior year tax return or what you expect on your 2020, and it should give you a good starting point.
Okay, so that is CRB. Now we'll move on to CEWS.
CEWS is definitely the most complicated. If your head's not already spinning, this one, we're not going to dive fully into it, but it is by far the most complicated. And I'm going to start off by kind of saying it's changed multiple times. It was initially four pay periods that ran in very unusual time frames. They weren't month start to month end. They were like the 5th to the 2nd of the following month, just unusual. And then after those 4 periods of CEWS, they changed it for period 5, 6, 7, 8, then 9 and 10, and so on, have had different rules apply. So it is not easy. I was joking with someone the other day that I think CRA is just making it so confusing to the point that nobody can figure it out anymore, and that's how they're going to stop it. But if you do sort of filter out all the mumbo jumbo that's within there, like the submission, how to calculate it, you can break it down and make it fairly simple. So it's a way to claim back 70% of the gross wage that an employee is paid up to a max. So $847 per week per employee. Runs all the way through June of 2021. It's in, what are we in, period 11 or 12 now of the filing. There used to be a minimum. There's no minimum revenue drop now. There used to be at least a 30% minimum. Now, since the changes have happened, now it's more on a sliding scale. So you can see on the right side here, at the bottom of the right side, if you're 0, like no revenue drop to up to just about 50, you've got a 0.8 times your revenue drop. So you still have to calculate your revenue drop. And so that's looking at, what did I earn last year the same month compared to this month? Or there's a separate way to calculate like a baseline for when it first started. It was what was January and February in 2020, but that doesn't apply to they had multiple ways to calculate your revenue drop, just because the same cookie cutter option didn't work for everybody. Seasonality, multiple different reasons why it wouldn't work, right? So now they've got it pretty simple where it's, what's your revenue drop? Let's figure that out. When were you paid and how much is your revenue dropped? Apply your percentages, multiply that by your gross wages, and you get a chunk back. And that's refunded to you. It is income, but it comes right back to you. And up to 75% of gross wages, it can be a sizable amount, whether it's one person, 5 employees, 10 employees, it can be a quite a large amount. Now, you can see on the right side, just the two top options, like above a 70% revenue drop or any between 50 to 70. It's their way of saying, CRA's way of saying, like, hey, you've been hit way harder. Like, you are clearly affected more. So we're going to give you the base rate of 40% plus a top up rate now. And you can see the top option now, the 40% plus the 35 top up rate, can get you to the full 75%. But it is confusing. Reading through their website on how to do it can be a little overwhelming. But as long as you just understand, okay, I've got to calculate my revenue drop and then apply that to these certain rates against all my gross wages, and I'm going to get this submission online. You fill in a submission online, submit it, and they refund you. They pay it right back to you.
Yeah, so your revenue dropped more than 70%, you're going to get 75 in a 75% of your wages subsidized. If it's 50%, you're going to get 40% of that subsidized. And then in between those, like if you had a 60% drop, it's a 58% subsidy. If it's 65, it's 66%. So yeah, it's just like, yeah, your subsidy is based on how much your revenue dropped. Okay. Next one.
Next one.
Uh-oh.
It didn't. It worked now. So, okay. So to continue on with CEWS, the wage subsidy. So yeah, you run your payroll. You do nothing different, just like you normally would. Run your payroll. T4 slips. They're going to include the actual wages the employee was paid. So you don't reduce anything on your wage expense or your T4 creation at that point. The wage subsidy that's refunded to the company, to the employer, that's taxable income to the employer. And what it's as other income, you wouldn't include it as sales. There's no GST collected on it, right? So it's a little different. It makes most sense to put it in sort of an other revenue category. So it's on top of that, like what we've been doing too, for a lot of our clients is showing it very, very like in a category of its own. So when CRA goes to match anything up for our clients, they're going to have record of how much wage subsidy was refunded to this employer, to this company, and it will match a number that's reported on the corporate tax return or the tax return that's submitted. So it's going to be very easy audit or easy review when CRA comes, if they come asking questions. Prepare for a possible audit though, as always, right? You want to save, like, how are you going to prove it after the fact? Detailed listing of your revenue, invoices with dates, bank statements showing deposits, some way that you could show someone after the fact, how did you calculate your revenue drop? How did you come up with this number? And then obviously for the actual wage subsidy, since it's based on gross wages, you gotta have all your payroll records for each employee. So you can say, well, yeah, during this period, this person earned X, and here's my revenue drop, and that's how I submitted it. It can be made really easy if you have everything organized.
Or if you use one of the like wage subsidy calculators or spreadsheets, you just say, if you've saved that for each application, then that should at least tell the CRA agent your methodology. And then if they still want to dig into receipts and bank statements and all that, they can. But just understanding that calculation will get you a good chunk of the way there.
Totally.
Okay, the CEBA loan. This is the $40,000. It started as a $40,000 loan to businesses, and then it was increased to $60,000 in the fall. With 25% forgivable, 25% of the first 40 is forgivable, and 50% of the top up, the 20,000. So this is probably the most common program that our clients applied for. Like, I don't know about you, Curtis, but I got way more questions about CEBA than any other program. But it is more straightforward. So one CEWS question takes way more time than 10 CEBA questions. So yeah, this is a great program. You're basically borrowing 60 grand and having to repay 40 by the end of 2022, and then you get 20 grand for free. So yeah, hopefully everybody that qualifies has applied for this. It's open till March 31st, and you apply through your bank. Yeah, you have to have a business, and there's obviously a lot of qualifying things that go along with that. You have to have a business checking account with that banker. Like, yeah, there's like, it's basically the bank giving you a loan and then the government backing that loan in case you default. You must have filed a 2019 or 2018 tax return to get it. And yeah, so there's two streams, I guess, for qualifying for CEBA. The first one and the original one that they came out with was you had to have payroll of at least $20,000 in 2019. And if you had that, then yeah, you like no more questions asked. You had, well, not no more questions asked, but that was like the big one that your banker would probably qualify you just automatically. And then people started complaining like, oh, I've been paying myself dividends and I use subcontractors. And so, yeah, I'm producing income for the economy and I'm keeping people paid, but not through payroll. Can I get some of this money so I can keep my business running? So then they opened up the second stream eventually, which I think hit in June. But the second stream, if you didn't have payroll, you had to show non-deferrable operating expenses. So you're running a business and if you don't have discretion over where you spend your money, then they would give you the loan to help cover those expenses. So things like mortgage payments or scheduled term loan payments, obviously property tax, utilities, rent, payroll, which you'd qualify under the first stream, but contractors under agreement or that you can prove are long-term in nature, insurance, lease payments, phone, internet, any subscriptions, any payments that you're basically obligated to pay, you just have to show that you have 40 grand of those and you should qualify. Things that wouldn't count are dividends or like you couldn't say, hey, I want this $40,000 and then pay down other debt or give yourself a bonus. Those things would not be allowed. Fuel, supplies, general expenses, like, yeah, it'll be interesting to see how they audit some of this stuff because you're shoveling snow or something, like you're a snow removal company. Yeah, you need fuel and subcontractors and stuff like that. So yeah, it's helping keep the business afloat, but yeah, you're not obligated to put gas in your truck, but you need it to run. So we'll see, but I wouldn't count on it. Capital purchases.
I think there is going to be some leniency on some of that, but as far as some of the qualifying expenses, if you haven't applied yet, or you're looking at like what you can spend that 40 on or that 60 on, what you can use the funds for, like some of the big ones on the left are obvious, right? At least if you just go back there like the rent or mortgage payments, like some of those bigger ones. If you're trying to like look at, did I have 40,000 of non-eligible or eligible operating expenses, operating expenses. But some of the smaller ones like phone, internet subscription, those are like, don't laugh them off. Like they're not, you think of them as they're as small as a pimple on an ant's butt, right? They're tiny little things, but you add them all up and they could add up. They could get you to that 40,000. And then, you're qualifying for when you otherwise wouldn't have.
Yeah, so you got your money, and the one thing everybody needs to be aware of is that forgivable portion. So if you only got the 40, 10 grand needs to be included in your 2020 taxes. If you got the full $60,000 in 2020, you're going to have to add 20 grand to your taxable income for 2020. And if you got the top up, the extra 20 grand in 2021, that you'll have 10 grand added in 2020 and 10 grand in 2021, which if you're a corporation at a 10% tax rate, assuming you have taxable income, like you're not in a loss position, that'll cost you 2 grand in tax if you got it all. Which, yeah, it is what it is. If you don't end up repaying it, so you don't get that 20 grand refunded or forgiven, then you'll get a credit back in that year, 2022, I guess.
It is weird. It's unusual for CRA to like accounting treatment in general, like especially for us as accountants, we're like, well, it shouldn't be revenue until it's recognized, until it's forgiven. But CRA has flat out said, no, you recognize it right away. And if you don't have it forgiven and it is part that converts to the term loan, then you can claim it back. You can essentially claim it as an expense. But everyone that took it will be taxed on it,
which really, when you think about it, like, and say you did have a really tough 2020, which a lot of businesses did in Alberta, and you expect there to be like a rebound in the economy and things to be better in 2022, you'd rather have that taxable income in 2020 anyways, because you're like, say you're in a loss position of like you had a $25,000 loss, adding that 20,000 doesn't cost you anything. Whereas in 2022, if things are great and you have a $200,000 profit, adding another 20, I guess, yeah, if you're paying tax, you're making money. So that's not a bad thing. But yeah, it was really unexpected. It caught us all off guard when they announced that it was going to be taxable in 2020. And that was just at the end of 2020. Like, when did that announcement come out? Like October or something?
Yeah, a couple later. I think it was, yeah, I can't remember off the top of my head, but it wasn't that long ago. Many people had already filed their 2020. So as far as companies.
Yeah. The corporate year ends that had like May year ends or whatever. Yeah, so if the loan is not repaid, it converts to a 3-year term loan at 5% interest. And yeah, who knows after that, after 2025. Sorry, I'll go back. The audit for this, we don't know what it's going to look like, but it's probably a good idea to, like, you get the 40 grand or the 60 grand into your account. You should see it on your online banking. But if they ever come back and asking and want to see that you spent that 40 grand on non-deferrable operating expenses, it might be a good idea to like just track all your expenses during the year and going into 2021 as well. Like, if you got the 60 grand, okay, property tax, 4 grand, mortgage payment, or yeah, just add them all up and see how much you can get, or be able to do that eventually. But
the confusing part is that it just mixes in with any other cash that you already had, right? So when they come and ask you, hey, what did you spend these funds on? I hope they were non-deferrable operating expenses. And you're like, well, here's a list of everything that I spent the CEBA loan on. Thank you very much. And they'll probably see that list and be like, this person's organized and prepared. And yeah, it all checks out. It looks good. But just like, it's important to remember that when CRA audits, the first thing they're seeing like statements or ledger. They're seeing dates and amounts and descriptions, right? So if the CEBA loan comes into the bank one day and then you draw a $40,000 dividend out the next day, that even if you were planning to, or even if you had excess funds set aside to do that, the date, amount, description, like, it looks funny, right? You're almost setting yourself up for CRA to be like, whoa, what's this? Like, prove to me it isn't as bad as it looks. So you just want to make sure that you're painting a really good, like, an easy picture. So when they do inevitably come at you with a letter saying, hey, show us what you did with these, like, prove what you spent it on. You can bingo next day, submit online, show them your listing or summary or transaction detail, and make it really easy on yourself.
Yeah, the CRA agents are just trying to tick boxes and move on to the next file. So if you give them what they want and you do it quick and you're nice about it, they'll probably leave you alone.
Totally.
Okay, we're over time already, but we'll just rip through the work from home tax credit.
Okay, so new credit this year, everybody with COVID working from home. There's an automatic sort of $2 a day up to $400 tax credit without needing anything if you've worked from home. They've also got a new T2200S, which is essentially your employer signing off, yes, this person worked from home and incurred expenses, and then it opens you up to the possibility of claiming more if you bought the printer and the desk and the chair and all the extra expenses you had to incur. So, but if you want to simplify it, $2 a day extra credit, and it's sort of a tick box yes.
Good.
Quick enough?
Quick enough. And you want to explain some of the tax slip implications this year?
All right. So two of them, we sent out a communication to our clients. Sorry, I'm losing the ability to speak right now. 10% wage subsidy was the first wage subsidy they came out with before CEWS was actually active. And you could just reduce your remittances by 10% of your gross payroll. A bunch of extra complications in there. It wasn't that straightforward, but now the CRA is wanting this PD27 form submitted to, if you're claiming it retroactively or you're claiming it and you also claimed CEWS at the same time. There's a few different reasons why you need to file one of these or why you wouldn't need to. So a PD27 form sort of squares away this first 10% wage subsidy and why your wage remittances, your payroll remittances might not match your total withholdings from people because from your employees, you may have dropped them, reduced them, I should say. So T4A slips are going to be mailed out to people that collected CERB and CRB. We've touched on that as well. The artificially, so I don't know if we have a separate slide on this, but CRA has touched on like artificially manipulating revenue or other financial numbers or dates or amounts for the purpose of claiming any of these is going to result in repayment of any amount you got plus a 25% penalty. So for anyone thinking like, hey, I can just tick this off, fill it in, the money's in my, like, don't, CRA will catch you. They are smarter than you think. I know people don't think too highly of them, but they will. They'll probably get you. Don't do anything shady. So
unless you know you're smarter than them.
Right. So that would only apply to accountants though, right? No. So one last thing, employers, a lot of you that deal with us have probably already seen it. We're asking you for some extra info if we can't figure it out on our own with the info we have at our fingertips. But CRA is also forcing all employers to report boxes 57, 58, 59, 60. And these are for gross pay per employee for these periods listed in the little bottom graphic. So essentially, sorry.
Yeah, they're making accountants and employers do their like auditing for them. Like this is like that's what they need to verify CERB payments, CRB payments, CEWS payments. Like so it just gives them a nice shortcut. Like, yeah, it's going to be a lot more work in February. That's why Curtis is so drained right now. He's been doing this for the last 3 weeks. But yeah, they're making us fill in these extra boxes and do that extra work so they can identify whether you were you were eligible for CERB or CRB without asking questions.
Essentially, if you have a box filled in, say box 57, March 15th to May 9th, and you show that you had employment income and you also were drawing CERB at the same time, that's their instantaneous way to send you a letter, check on you, catch you. So
yeah, repay that. Alberta Kenny just announced this week, I think, just an extra 15% of your income can be subsidized if you're in one of those industries that was hit really hard and your revenue has dropped by 60% or more. So it's just up to 10 grand. So they did the original 5 grand, then they did another 15 grand in the fall, and then this is just another 10. So total of 30 grand you can get from the Alberta government. But you got to get on those ones quick because there's a certain amount that they fund and then they shut it down. So yeah, in summary, we got the CERB, CRB, CEWS, and CEBA. And we'll open it up to some questions here.
Yeah, we ran it much longer. We thought this was going to be a quick one and we'd have extra time for questions, but I guess I started rambling.
We're tired and we
Nice.
ramble.
Yeah.
Okay, so we got one vote for would marketing costs be included in operating costs for the CEBA? I think that would depend. If you have a subscription for like a marketing, like SaaS, like a software, like HubSpot or something like that, that would be okay because you can't defer that. Any monthly subscriptions are fine. If you have a contractor like freelancers, yeah, if they're under contract, their costs would be fine. If you don't have a signed contract, you can either make one or show a history that it was like a de facto contract. Like we have a history of monthly payments for this long, and we need this to like.
You'd want to show that you have always sort of had this, and it wasn't something new, right? Because if all of a sudden you have CEBA loan and then you take 60 grand and hand it over to some marketing agency to pump up some more revenue for you, seriously, that was deferrable. You didn't have to do that. But if it's something that has a history and it's more of a constant thing that you've always had, it should. It doesn't say in black or white anywhere if it does qualify, but it like specifically to a situation like that. But I'd argue that it's non-deferrable because it's something you've always incurred and it's part of your business.
Yeah, like if you bought a bus bench and it's $1,000 a month or something like that, and you sign a contract, then yeah, definitely. If it's $1,000 a month for Google Ads, you'd have to support that. Like, oh, I'm paying this consultant to manage the Google Ads, and it's kind of our program, and this was put in place in January 2020. They'd be hard pressed to deny that, I would think.
Yeah, but Trevor, I like Matt's first idea, the bus bench. I'd like to see your face on a bus bench going forward. So that'd be wonderful.
Bullseye recruitment. No, that would just like ask for people to throw snowballs or eggs if it's called bullseye on a bus bench. Kids these days.
Hey,
anyways,
interaction. That's
yeah, no such thing as bad publicity, hey? Okay, are repay rates based on gross income or net income?
Oh, I had asked, and let's see
you wrote a comment in there.
I did. I just wanted to clarify. I saw that part way through while I was not talking, because that would have been impossible. But so CERB. So CERB has no repay. It's the CRB that has the new one that's active now has the repay. So it would be gross, not net. So if your T4 is not your take home, it's your gross, gross on a T4, but it would be net as a sole proprietor because it's the eventual amount that moves over to total income and gets taxed. So it would be gross on a T4. It would be net if you're a sole proprietor and it's business income. Anything over 38 would then be repayable at 50 cents on the dollar.
And if you're referring to the $1,000 made during each 4-week increment, that would be a very good question.
And if we're
probably
shoot us an email if we're not clear or it doesn't perfectly make sense, and we can clarify further. But you said that helps, so hopefully we hit the nail on the head.
Perfect. We'll assume we did. Okay, I went on temporary layoff at the end of April, and I applied for CERB through Service Canada, but then got EI instead. I received the T4E, but no T4A. Should I expect to see a T4A? So did you ever receive payment for CERB? If you got CERB and EI for the same period, then you should expect a repayment, and you would get, so the T4E is for EI, T4A would be for the CERB. So you can't get them both for the same period, but if you got one and then the other, you should be fine, but you should get both slips, the T4E and the T4A. The T4A might, I wouldn't even check until early March. March 10th is when they say they'll be all
mid-March.
Yeah, so I guess we'll just, just wait and see what you get in the mail. And then he went back to work for November and December. The layoffs became permanent at the year end. I received a lump sum layoff payout in mid-January. Will I qualify for EI again?
We Service Canada with the EI. We're not in their day to day like we are with CRA and their programs and the tax stuff. So I think you would, from everything I know, because you did go back, you did accumulate hours, you did pay into EI again, and then you should qualify if it was now switched to a permanent one. But you're probably best to go through the application process and see the waiting period on EI. What that first time claim is much longer than a when you redo or reactivate the same claim. It's when you're reactivating a claim that you've already had, it's what, 2 weeks, something like that, I believe. So
yeah, and so you were an employee and then you got laid off, but if you don't qualify for EI, that's what the CRB is for. So you could try that one.
Yeah, that would also, if your layoff is due to COVID, you don't qualify for EI, then CRB is there to help out. So should be covered regardless.
Okay, I'm self-employed. I claimed $10K in 2020 with CERB and made well under 38 grand. Will I have to pay back? With CERB, no. You'll have to pay tax on the 10K you received. A little bit of tax anyways. Am I reading that right?
Yeah. If you had 10,000 in 2020 with CERB on top, well, it depends how much CERB. If it was 10 CERB and 10 self-employed, then you'd owe some tax on that. But CERB and the 38,000 don't correlate. CERB was the first one. They didn't withhold any tax. You'll pay some tax on the CERB income depending on the tax bracket you land in, mixed with all your other income. So your self-employment income, CERB, gets your total income, and you pay tax on that. But
and if your total income, the CERB and the self-employment, is under 20, you'll pay like zero tax. You'd owe a little bit of CPP on the self-employment income, but yeah, you'll pay no tax.
And if you started to claim some CRB, like if you meant CRB as opposed to CERB or CERB, then yeah, if you're under 38, there should be no repayment of CRB as long as you met all the other kind of criteria for it.
Yeah. Okay, could you speak to the regional recovery fund available through Community Futures versus CEBA? We had one client that applied for that, and it seems like it's basically the same program as CEBA. It was just quicker to launch for that dividend. Like for if you had claimed dividends, I know we had one client that applied for both and heard back on the RRF. So he went with that and then canceled his CEBA.
Yeah,
but
shouldn't it be the RSRF if it's the Regional Something Recovery Fund?
Oh yeah, it's typo probably by Robin.
No, what a great joke. Yeah. Too many acronyms now. It's acronym overload. So yeah, I don't know too much about that one myself, but again, if you wanna quick kind of shoot off, and if you want to reach out by email or reach out to someone on our team, and we all know the CEBA so well. If we popped in and kind of took a deeper look into the RRRF or whichever it is, quick comparison wouldn't be too tough.
Yeah, I looked at it back in June, I think, and it did basically have all the same. It was very similar to the CEBA.
Okay.
Okay, with Qs based on revenue drops current year over same months previous year, with the industries that will continue to experience devastation in 2021, a zero revenue in May 2021 cannot result in a percentage drop from zero in May 2020. would we then become ineligible in May 2021?
No,
there's no minimum revenue
there's no
drop.
minimum, so it would still be that 0.8 times the, but yeah, 0.8 times the revenue
Zero.
drop. So
Yeah.
That's something, Dave, we'd have to probably look closer at and really dive into how some of these things we don't start to figure out until we're faced with a situation that maybe CRA I'm sure they have thought about that, but it might be a unique scenario where we have to say, okay, now do we get to base the revenue drop on some other period as opposed to May 2021 compared to May 2020? Can we still compare it to May 2019? It's something I don't know off the top of my head, so we'll have to kind of dig a little deeper there. But that is a really good question.
Yeah, really, there's like 3 different ways to calculate that revenue drop, and so if it's 0 in all 3 ways, then the way it's written, no, you wouldn't get the wage subsidy. Even though a travel agency should have a lot of business in May, but 2020 was hit hard, and so was 2021. Hopefully, business is back up and running this May. We will see. But yeah, if you have more questions, reach out to Curtis. He'd love to help you out. Curtis and Christy are CEWS champions. Okay, well, that is it for questions on our polls. Last chance. Just let us know what government programs you applied for, which one was helpful. If CEBA was, did anybody get an Alberta grant? A lot of no's on that one. I just know that the first one, the 5,000, was sold out. Like, it seemed pretty quick. Like, people were on it, mainly because Alberta was pretty hurting before COVID hit. Has your business seen a revenue of 60% or more? So that's one of the requirements for the Alberta one. So
I'm more interested in that bottom poll question. I kind of want to dive deeper into people's other hobbies. COVID hobby. I bet we'll have.
Yeah, give us your best one. We'll send you a t-shirt.
Yeah, some unique ones there.
Baking, gardening. Home improvement seems to be a common one. But okay, thank you everybody for coming, and we'll be sending out a video recording tomorrow. And yeah, any questions, don't hesitate to reach out. And you all have yourself a great night.
Thanks for tuning in.